Okay, we're recording now. Okay, welcome guys to this class. I'm going to be going flow and market data. So think Zinc for this awesome slideshow presentation. I kind of stole his outline and I kind of made it my own a little bit, and I added some things in there. But this is the Oasis University lesson. Super excited to be with you. This is a surprise class. I'm going to be talking about flow and market data, which is very near and dear to my heart, to be honest. I first started using data like about, let's say, like 3 years ago. I started using data in my trading almost exclusively. But before that, I used to trade just off of technical analysis, patterns, support and resistance levels, EMAs, that whole ordeal. And I had a little bit of success doing that, but there was always something missing in my arsenal. And I always knew that there was going to be something else that could further my education and further my profitability in trading. Because, you guys know full well that there's one good way to trade, and that is through just fundamental analysis. That's through buying and holding shares for the long term. If a company makes good money and they're profitable and they have good outlook on their business, more likely than not, you're going to see profitability over the long run just by by buying and holding the shares of that company. That's what Warren Buffett does. That's what a lot of these big time investors do. They just buy and hold, which is honestly, I think that's the best way to invest in the stock market. But there was always something in me that said, okay, so if that's the best way to trade, what's the next best way to trade in the short term? What's the next best way with a little bit of risk that I can do to further my trading profitability just in the short term? Because I have my long-term stocks, I have my long-term investing, but what can I do to make a little bit of income on the side just by trading a little bit of money of my not a whole portion of my portfolio, but maybe like 10 to 20% of my portfolio just set aside for trading. And that's how I pretty much came across data analytics and market data. So that's what I'm going to be talking to you guys about, and that's the introduction for today. Yeah, Ryan, I am recording. Don't worry. So do you guys have any questions about that little introduction? If not, I'm going to move on to the next slide here, and then we can have a discussion here about that. So if you guys have any questions about like my upbringing about flow data and all that, please feel free to type in the chat real quick. If not, I'm going to move on here. I see no one typing, so that might be a good sign. Okay. So we'll move on here. So I'm the Stonk Dad. That's me, a picture of me. We're going to be going over flow data. We're going to break down market flow, the breakdown of live orders, what they are. We're going to talk about market net flow, what that is. We're going to talk about the convergence tool, which I talk about all the time. And I know a lot of you guys are in high roller too, the high roller rank. So you guys kind of are familiar with what I talk about. But for those of you who are not part of high roller, I'm going to be breaking down all of this so you understand what I do, how I trade this market data, what the data is, and how you guys can utilize it for your own advantage. And that's pretty much what I just said here for the gamma exposure. I use gamma exposure levels for support and resistance levels. It's just pretty much a way to see where market makers are moving the markets, because that's who move the markets. Retail investors do not move the markets, no matter what they tell you. Market makers definitely move the markets, so that's why I utilize GEX in my trading, and I'm going to go over what that is in a further slide. Oh, you guys don't see what I see on my... Do you guys not see that? Cheeks? Do you not see my my slideshow? Uh-oh, that's not good. Ryan, do you see it? Yeah. Okay, Ryan sees it. Rotherby sees it. You see my face. Do you not see the agenda part? You see the agenda and then flow data and stuff, right? Yeah, reset it real quick, Cheeks. I'll wait for you. Everyone else sees it except for you. Let me know when you see it, Cheeks, because this is pretty important. I'm going to be going through live stuff as well too, so it's not just going to be the slideshow. I'm going to be going onto the actual Flowtopia and Traditix dashboard so you guys can see. So while I'm waiting for Cheeks, let me just log in here. Oops, where's the login screen? Wait, what the heck? Hold on. I think we might have an error with Flowtopia that we might need to fix because I've already signed up for Flowtopia. Dashboard maybe? Okay, well maybe we won't be able to use Flowtopia today, but that's all right. Just go without me? Okay, yeah, I'll record this for you, man. Don't worry about it, Cheeks. So you'll be able to see. So you can either stick along with me and ask questions, or you can just watch the recording later. But yeah, it seems like everyone. Please find a way to make Flowtopia work. Okay, let me see why I can't log in. Flowtopia. Let's try this. This should work. Yep, there we go. There we go. So hopefully this works. Please load for us. Load. I might have a hard time loading because I'm literally recording something and then I'm on this live stream too. Okay, while that loads. Oh, did it load? Okay, perfect. Okay, so let's go back to the slideshow here. So let's move on here. We're going to be talking about the live option flow and the live orders that come through. So I put this little thing on the asterisk down here just so you guys know. Live option flow can be a good indicator to use when entering a trade. Using flow has its pros and cons like everything else does, but following smart money strategically, I put that in big caps, can greatly increase success in trading. So what I mean by that is I would not solely rely on just live options flow. So this is the live option flow. This is just a screenshot of it, but if you go over to Flowtopia, you can kind of see it. So these are the live orders. Let me get rid of the, let me reset this so you guys can see the live orders come through. So what I mean by this slide here where it says live option flow can be a good indicator, but solely using that sorry, I can't even talk. Solely using these orders that come in for your trading. So just blindly getting into say Airbnb puts for January 19th. That's not a good way to trade. So there's got to be several different factors that you have to implement into your trading rather than just taking these trades blindly, because there's aspects into why you don't know why these big money movers are getting into them. Say like Tesla, Friday expiration 220 calls, they just put $55,000 into that. So you have no idea why they did that. So that's kind of why I'm going to be here explaining my strategy and what I do to kind of limit the risk factor in using flow data. Okay, so that's that slide. So how I mitigate the risk of just using these flow factors is I use something called market net flow. So what market net flow is, it's basically a compilation of all of these orders that you see on the live order flow. You see all these calls: Tesla, Nvidia, Airbnb, SPY puts, more Airbnb, Nvidia, PayPal, all of these compiled. You see tons of orders, millions of dollars that come into these every single minute. And what I use is this tool called Market Net Flow. So it compiles all of the buys and the sells of calls and puts of the entire market. So that's what's cool about this tool that I use, and that's why I solely rely on this, is because it's a good synopsis of what's going on in the entire market at a certain period of time. So in this screenshot specifically, this is from yesterday, you can see that there were a ton of call buyers. This green line is calls. And then this red line here are puts. So you can see that there were a ton of call buyers in the beginning of the day. This is a period of time. You can see a market open and then close at the bottom here. But you can see that there were a ton of call buyers, and then it kind of evened out. It was kind of flat for most of the day. And you can see that price kind of respected that by consolidating, pulling back a little bit, and kind of just staying around the same level for most of the day until puts started to come up quite rapidly, and you could see that price went up and then it tanked at the end of the day. So that's kind of why I use market net flow, is because it's a lot simpler than going into say Flowtopia, or even on Traditix here. It's the same stuff, same data, but it's a lot easier than trying to pinpoint a certain order and playing that. So that's why I use market net flow, and I strictly trade SPY for the most part by using that tool. So do you guys have any questions about that before I move on? Hopefully you guys do have a couple questions. Basic question, do I need to sign up for Flowtopia? How much does it cost? Or is there a free version like TradingView? So we're in the process of making a free version with delayed data. So stick around if you want a free version of that. It's just with delayed data. So most people want live data, but I'm not sure exactly how much it is fits. But for Flowtopia, I think it's like, I want to say like 30 or 35 a month, I think, for this data. Jamspoon, is it just 0DT contracts that it measures? No. So this tool that I use, it can, this is all expirations. So I failed to mention that. So this market net flow tool that I use is all expirations. So that's the default. So this is just today's flow. So, or sorry, yesterday's flow, this screenshot. So what I'm looking at here is all expirations. So all of the calls and puts bought or sold in the entire market yesterday, if that makes sense. So if I look at today's flow, this is up to today. These are the buys and sells of puts and calls in the entire market just today. So if you want to see like a chart history, you can go back, say, so this is just today. You can go back like 5 days and you can see all of the calls and puts being bought from the last 5 days flow. And then you can also change the expiration, which is kind of cool. So no filtering is just all expirations, but you can change 7DT. So these are 7-day expiration filter, 15, and then 30. I hope that makes sense. But for the most part, I just use all expiration data. I don't really flip-flop. It's good to see the other ones to kind of line up what you're seeing on data. But for the most part, I just use the all expiration no filter thing. Let me take a drink real quick, guys. If you guys have questions about that, let me know before I move on. When you say we, what do you mean? That's just the Flowtopia team is what I mean there, Ryan. So Champ, me, Britt, and then the developers. Hawk asks, how do you determine buy or call on SPY? So if you can elaborate on that a little bit more, Hawk, I'd greatly appreciate that. I'm not sure what you mean by that. Are you asking like, how do I determine to buy a call or put, you would say? I'm going to be going over like my strategy and how I determine that, if that's what you're asking. Medi, yes, Traditix does require a monthly payment, but I have discounts if you would like that as well for Flowtopia possibly, and Traditix too. Yes, Ryan, nice. You guys are already wanting discount codes. I haven't even gotten into like the nitty gritty and you guys are already wanting discounts. You guys are crazy. I've barely even shared anything and you guys are already foamy at the mouth. I love it. You guys crack me up. Okay. So, yeah, save that at the end if you guys have questions about the platform and stuff. That's not what I'm really here for. I'm here about like learning about it. So save those for now. Okay. So before I move on here, do you guys have any questions about this chart at all? The market net flow chart. Before I move on to the next slide. I'll get to my strategy. Don't you guys worry. Don't you worry. Once I get through all these slides, I'm going to share everything. Don't worry. Yeah, I do use Flowtopia as well for my strategy. Although it's basically all the same stuff, the same data that comes in. No questions about this chart before I move on? This is a pretty crucial chart, guys. I show this all the time in High Roller. So if you guys are familiar with it, awesome. Oh, I did fail to mention one thing about this chart. This white line that you see is the price of SPY. So we compare market net flow with the price of SPY. It has nothing to do with the calls or the green line or the red line. So if things cross, it doesn't matter. I have a lot of questions about that usually, but this is, so you can just take that off. It's pretty much a separate chart away from market net flow. It's just a comparison basically, so you can see where the price is moving. Okay, Mehdi has a question. According to the chart, when it turns green, okay, I'm going to get to convergence. You guys are getting ahead of me. You guys are getting ahead. I'm going to talk about convergence. Don't you worry. Hawk, okay, can you determine bull or bear? So that's the good question here. So Hawk, you're not part of the high roller, so it might be a little bit harder for you to understand what this means. So today, usually when, this is a bad example, so let's just go back to today. I can go over today's flow too in real time so you guys can understand a little bit more, but it's a little bit more complex. But for the sake of Hawk's question here, how did I determine bull or bear? So that's just by the call buying and then the puts. So let's say that, or just in this example, calls are well above puts in this example, right? You can see that calls are at about 10 million, maybe a little bit higher, 10 to 15 million net positive at this point, and then puts were at 0 and slowly going up. So that's how I determine bull or bear. So if market makers, or sorry, not market makers, if the entire stock market is bullish, they're going to be buying calls, and then if they're bearish, they're going to be buying puts. So if this green line is above, they're bullish, and then if the red line is above, that will be bearish. So I can give you an example real quick of a bearish flow day. I think it was Monday. Kind of right here, you can see that the red line was above the green line, so you can see that the market kind of followed. It was choppy, as well as flow was, up until puts broke out, and then price kind of broke out of this consolidation zone by this white line, if that makes sense. I hope it does. Did that answer your question, Hawk? Yes, no, maybe so. Thanks. Okay, sweet. Okay, let's move on. I'm going to be coming back to this chart, so don't worry. If you guys have more questions, I'll greatly answer that. Okay, so let's talk about convergence now. So I talk a lot about this convergence bar, and this coincides well with my strategy and what I do every single day. What I look at the flow chart, and then I look at this convergence chart here. So what I put here on the side for a little bit of notes, I said convergence shows the strength of price action relative to the flow data. So what that means is if price is moving with the flow, so if calls are being bought and convergence is green, as you can see notified here by this little green dot. Sometimes it doesn't show up, which is annoying because it's a little glitch. But you can see that convergence turns green, so the market is moving with flow. So calls are being bought, the market's moving up. You can see that there's strength moving into the market with the convergence bars, which is the strength. Remember, it's the strength of price action relative to flow. You can catch really, really nice momentum moves up. And that's pretty much the nitty gritty of my trading strategy. There's a little bit more, which I can get into it, what I look for. But I basically look at flow data. I look to see if it's bullish or bearish. I look at convergence bars. Once it flips, I enter into trades. Now, there's a lot of aspects into that and factors that I play into part. I don't get into every single convergence flip, especially if they're midday or if they're below EMAs and stuff, but I can get into that later. But you can see that here it did very, very well. You can see that we flipped green here yesterday. We caught a nice couple dollar move on SPY with this one, which was pretty much, you could be your one and done trade in the morning. And then it caught another one in the morning for a pretty good gain here from like 436, 436.5 all the way up to like 437.50 or so. Does that make sense? I hope that makes sense. I'll just finish up this little thing here. So convergence bars will turn a specific color to match flow. So if it's bearish flow, they'll turn red as momentum is heading down. And if it's going contrary to flow, it will flip gray. So say for this example, you can see green, the call flow is up. the market was moving down slightly, it flipped gray, and we had a very nice move down. So gray convergence, it moves contrary to flow. Green moves with the green flow. So let me do a bearish example so you guys can see what I mean. Let's go back to Monday. So Monday was a good one. You can see that it was kind of choppy, but then once puts broke out and there was a divergence between those, you can see puts are above calls in this situation. And then convergence flipped around here. You can see it indicated by this red dot. So the market moved with that flow, that bearish flow. Now, sometimes it doesn't work. So you can mitigate losses by just setting stop losses and things like that. And I'll get into that too with my trading strategy a little bit more. But that's just a little rundown of the market net flow tool. So if you guys have questions about that, let me know. Convergence, market net flow, before I move on to the next thing. Let's see. Do you have a Twitter account? I do have a Twitter account, Hawk. So you can, let me type it in here real quick. At the Stonkdad. It's just at the Stonkdad on Twitter. Hawk. Let me tag you. There you go. Okay, a couple more questions. Fitz says, when you say flow, does that mean people are putting in orders for calls or puts, or are they actually buying them? So that's what's cool about the market net flow tool, is it calculates the net flow. So what that means is the buys and sells of calls and puts, and it's plotted by this green line. So this is all the buys. So there's a lot more call buyers in the market than there are put buyers. So as you can see with the flow data here, you can see that there's lots of buys. So here's an NVIDIA call being bought, and then maybe you'll see like an NVIDIA put. So that puts into calculation the sells of the calls, because these orders can be sells as well. So what this tool does is it calculates the sells as well. I hope that answers your question, Fitz. People putting in orders. Yeah, I think that answers your question. Okay, cool. Ratherby, do you know of any ways the tool can be manipulated? Yes, there are manipulations that can be manipulated. I'll get into that too. So there are some flaws, like with everything with this tool. Sometimes there's very large orders that come in, and you can see like crazy spikes in market net flow, like where puts like go from 0 to like 20 million, which is insane. So yeah, there are some flaws in this tool, as with everything. There's always got to be something, right? So nothing's ever 100%. So you guys do need to take into consideration factors that can be manipulated by these orders, because there's millions and millions of dollars that go into these orders every single minute, pretty much. So like 300K, 60K, 70K, 50K, 130 just within the past minute or 30 seconds. Okay. Can you show flow for just SPY? Yeah, you can just show flow for just SPY. So why I don't look at flow for just SPY is because there's a lot of hedging that goes on with SPY. So what the developers for Traditix does is they take out ETFs, because market makers do, and I'm going to be getting into this a little bit later in the lesson, but what market makers do in trading is they like to hedge against SPY a lot, and a lot of these ETFs. So there's so much flow that goes into those ETFs. It's actually insane. Billions of dollars probably a day. So you just have to be careful about the ETF flow, because sometimes it could be, we could have a very nice momentum bullish run on SPY, and the flow on SPY says bearish. It's really flawed data. It's hard to kind of understand the ETF data, because there's so much hedging that goes on with that flow data. Good question, Medi. Fitz, how do you best use this with other strategies? For example, if I have a trend line showing upwards momentum for a stock, how would I overlay the flow data to become much more confident in the trade? That's a very, very good question. So I hope you guys can see my chart here. I think you can, because I can see it. So for this example, we'll go back to yesterday's flow. Yesterday was Tuesday the 7th. You can see that we had a very nice uptrend day, right? So this is your uptrend. So this is kind of what you're talking about here. So how you can utilize that is you can see a bounce here in the morning, or sorry, this is the swing low, and then here's the pullback. So on the market net flow tool, you can kind of see the price action too here. So if flow data is bullish, you can get in on the pullback or on EMAs. I don't usually use trend lines. I use EMAs mostly. But if you use trend lines, it's whatever you feel most comfortable with. But I use EMA pullbacks instead of trend lines. It's almost the same thing, but I just use EMAs. They're a little bit more accurate than trend lines, in my opinion. But you can utilize this by getting in on pullbacks on the bounces here on the trend line. Boom, boom, boom. If the flow is bullish, per se, on this move up, if that makes sense. Cheeks, yeah, is it okay if you watch the recording and ask you some questions? Yeah, sir. Absolutely. I hope that answers your question, Fritz. But if you have trend days like this, you're going to see very bullish flow like you do yesterday. Those are kind of like the best days to trade, I feel like, when it's super, super bullish and then puts are below zero. It kind of got a little bit hairy towards the middle of the day, but nonetheless, it was still bullish. ZT, when you see a sweep, is that green light? Oh, I forgot to go over the thank you who asked that. ZT, thank you for going over that. I forgot to go over the aspects of the flow things in here. So ZT asked, when you see a sweep, is that a green light to buy the con? So that's a good. So sweeps are probably the most bullish orders in flow. There's different ones. There's called block trades, and then there's called sweeps, as you can see here. Sweep trades are probably the most bullish and most confident moves, I'd have to say, in flow data. Blocks are just a bunch of noise, in my opinion. It takes into consideration the flow data, like in here in market net flow, but I hardly ever pay attention to block trades. But sweeps, on the other hand, are very good because they can be very, very aggressive orders, per se. So I wouldn't say that it would be the green light to buy it, but I would definitely be watching very close on the sweep orders, especially multiple sweep orders. If there's a ton of them and millions of dollars going into a specific option contract, then that would open my eyes a little bit more. But I wouldn't say that individual sweeps would be just the green light to just buy it without even doing any due diligence on that contract, if that makes sense. Golden sweeps are the best sweeps. Yeah, James Spoon. Golden sweeps are definitely something that you want to pay attention to. Can you show sweeps for SPY yesterday? Yeah, let's pull it up real quick. But let me go through each of these things real quick before I move on. I hope you guys are staying with me here. SPY, apply. Oops, I forgot to do SPY. Is it going to kick me out? So there's the golden sweeps for SPY yesterday here. So you saw lots of puts, lots of puts, lots of puts, lots of puts, and then also lots of calls too. So that's what I mean with being due diligent, because you can see lots of calls. You can see 9.8 million, 24 million, 29 million in calls, and then you also see the same with puts, 4 million, 18 million, 12 million. You can see tons of flaws in these. So that's why I say you got to be looking at other aspects rather than just these individual orders. So let me go through these really quick, the aspects of each order before I move on. I forgot to do that at the very beginning. So let's just move back. Actually, we'll just stay on SPY for this example so it doesn't move. So for this example, this came in at 11:57 a.m. Eastern time. So each of these orders have a timestamp. You can see when they came in and when they were given to us. So for this example, 11:57 a.m. Eastern time, it was a SPY call. You can see that the expiration is March 15th, 2024. The strike price is 463, and it's a call, obviously. And the spot price is where they bought it at. So you can see that they bought SPY calls at 436.1. And then you can see the detail of that order. They bought 6,968 contracts for 5.2, so that's $520 per contract. And that comes out to be $3.6 million for this specific order. And this is a above ask order. Now these are the most aggressive because, as you guys know, in option contracts, or if you don't know, and you're very new to options, there's a bid and ask spread in the options. So there's a place where there's buyers and sellers where they want to sell that option contract. So in this current example, they bought at above ask. So they bought above the asking price for this specific contract. Okay, does that make sense? Before I move on, I forgot to go over that. That's just like the basic rundown of the option, the real-time option flow data, the real-time flow that comes in. You've heard Britt speak of these. Yeah, I don't really pay attention. To give you guys a little bit of a backstory, I hardly ever pay attention to the live option flow. I much rather look at something that's averaged together. I can see the overall view, like something like this in a tool. And I know a lot of people like looking at specific orders, and I used to do that as well before this market net flow tool came out. I used to look at multiple golden sweep orders for specific contracts, and then that's where I would do my due diligence and look into that contract and then find an entry. So just remember, bullish golden sweeps are the most bullish, and if there's multiple orders, it's going to be a pretty confident move to that side. So you just got to be paying attention to that with using flow like that. What are golden sweeps? Golden sweeps are just it's basically the same thing as a sweep. It's just a ton of money flown into that. That's all it is, basically. Over $1 million is what a golden sweep is. Over $1 million order. And a sweep is a order across multiple exchanges, and that can be under $1 million. So it's just it's just multiple orders is all it is. So let me reset this and then see if I can find an example. So you can see here, this is just a regular sweep. It's with $100,000 is all it is, MSTR. Why would you buy above ask? I don't know, because they want it to be filled, Brian. That's a good question. You never really know what the thought process is behind each order. But from my understanding and my knowledge on those orders is if they're above ask, like this one just came out and above ask, they want that to fill right away. So they think that it's going to go a certain way pretty quickly. So yeah, that's above ask orders are really good to pay attention to. Sweeps can be bearish, puts too, right? Yeah, sweeps can definitely be bearish. There can be bearish sweeps and bullish sweeps. So like this one right here is a bearish sweep because, sorry, it's moving so much. This is a put order right here. It's moving because there's orders coming in, but what are block trades? It's just in a single exchange. It's just a small order, basically. I would consider them just noise. It's because they're lower and there's just spread out. It's personal preference, honestly. I just think there's just so much noise. Like, look, there's so many block orders coming out. I'd much rather be more confident in moves and just get an average of all of these orders combined rather than just looking at specific block orders. I don't know of anyone developing a strategy with block orders. But yeah, I don't know if that answers your question. Can you show us flow golden sweeps for a single stock, and can trade ticks? Yeah, you can. So let's give an example for like Tesla on the Flowtopia platform. You can see just by the filters, we can look at golden sweeps here and then hit apply. You can see the golden sweeps for Tesla. Oops. I think you're supposed to do the filter and then put in the thing if it's going to work. Maybe it's not working right now. I don't know why it's not working. Hold on. Tesla, click. Okay, there we go. So there's the bullish golden sweeps for Tesla. Today you can see when they came in. So there's only about 10 or so bearish and bullish golden sweeps for Tesla. And then yesterday there's a ton of puts. Look at that. A ton of golden sweeps on puts. So this is kind of good to see. You can see where the option strike is, and you can kind of develop a strategy on where these orders are going. So this one is an $84 million put, but this one's way in the money. So you got to pay attention to that too. This looks like it happened. They got some option contracts before the Tesla split. So you got to pay attention to that. And that's why I don't really look at live orders. I like looking at net flow better. You can look at individual stocks on Flowtopia and Traditix. It's the same pretty much. You can look at the orders. Traditix is just a little bit more complex. Flowtopia is working on new tools to kind of develop more complex data where they can implement it and see it a little bit better rather than just looking at the live orders like this. Okay, I hope that makes sense. Can we move on? I'm going to be talking about gamma exposure next. If you guys don't have questions about the market net flow tool, Convergence, the live orders or anything, we can always go back if you do have questions, but feel free to type before I move on to gamma exposure. Gamma exposure is going to be very hard to grasp for you guys, so I'm going to try to do it as simple as possible. Let me take a drink real quick. I'm talking a lot. I'm not used to this. Okay. The market net flow. Okay, wait, hold on. Let me read your question, Mehdi. The market net flow, do green and red dots self-generate? Yes, they do. So sometimes, so you can see that the green dot worked here, but it didn't work over here. So you gotta just look at Convergence. That's just a little glitch that they have on the platform where sometimes it doesn't flip a certain color when Convergence does. I don't know why that is. It's just a development error. So it's just kind of to pinpoint where it flipped on the SPY chart. But you just got to pay attention to these Convergence bars. You can see that it flipped green here and then gray when it flipped there, but didn't flip green. There was no green dot there. Big Papa's in the house, baby. Let's go. I recorded it, Big Papa, so I didn't know if you were coming in, so I just started recording it myself. I think you were the recording guy, but welcome in, dude. You missed half the lesson, but that's okay. So yeah, if you guys don't have any further questions about the market net flow tool, then I'm going to move on to gamma exposure. Let's go, GEX. Yes, let's go. Okay, Mehdi has one more question before I move on. Okay, yeah, go ahead, Mehdi, before I move on. For market net flow, when it turns green, okay, how long do you wait to enter? It really depends on what's happening in the market. So like I said earlier, there's a lot of factors that go into my strategy. And when I get to the end, I'm going to explain like a live trade from today that I can share exclusively to you guys, so you'll understand that a little bit better. But just to give you a short answer there, Mehdi, I usually look at the market net flow if it's bullish, and if the convergence is green and we're above EMAs, so this is from yesterday, you can see that it turned green, kind of like around this area. We got a slight pullback, and then we wait, hold on. This was Tuesday. Okay, sorry. This is right here. So you can see that we got a big move up. We got a little pullback. And once it started to move up through this level, then the convergence flipped green. So I pretty much wait for the EMA pullbacks, and then a retest and then a bounce. So you could have gotten in a little bit earlier than what it shows here. So you kind of just have to develop your own strategy. But this was a really, really good one where it came up and retested this gamma exposure level, 436, and then it came back down and retested this EMA cloud, and you could have rode it all the way up. But that's the short answer. I'm going to go over a live trade from today that you guys can kind of learn from. So don't worry about that, Mehdi. I do not set my levels by dollar. I set my levels by GEX levels, and that's what I'm going to go over right now. So you can see that it is kind of by dollar right now, but these are just the gamma exposure levels from yesterday and today. I haven't deleted yesterday's yet, but you can see that they're holding pretty well. But yeah, I'm going to go over that. Okay, moving on here. So this is a slide from Zinc. Thank you, Zinc. I don't know if you're in here, but I actually copied this exact slide from Zinc's lesson yesterday. And I just went off of that because it's really important that you guys, oops, I moved that. It's important that you guys understand the Greeks on option contracts before I move on to Gamma. So what Zinc told you here, I stole this slide to the T. I just copied and pasted it. So feel free to give Zinc props on this one. But I couldn't have explained it any better what delta is. So delta refers to the value of a contract gain per dollar move in the share price. So you can see on this option chain here, you can see the 436. I'm guessing this is SPY. You can see that it has a delta of 0.2639. So if SPY moves up a dollar from where it's at right now, it's at 437. If it moves up a dollar and you buy this contract and it moves from 437 to 438, this contract will increase theoretically by $26 per contract. And that's what the delta shows you. And that is the example that Zinc gave you here. So say a contract is $1 with a 20 delta, SPY moves up a dollar, that contract will go up $20 or 20 cents per share to $1.20. Now, does that make sense before I move on? I know Zinc went over this before, so I don't know if you guys have any questions about delta, but it's important to know what delta is before I get into the very, very advanced things about what gamma exposure is and how market makers react with delta and gamma. I'll give you guys a couple seconds to type in chat, OU Classroom. Let me know before I move on. We're not going to go over theta decay because Zinc did that, and it doesn't really have anything to do with gamma exposure right now. Okay, that makes sense. So the main takeaway with this is the delta is the rate of change of the option contract per dollar moves is basically all it is. Okay. All right, let's move on. Okay, so I don't have any fancy screenshots on here, but going off of what this delta slide is, we're going to talk about gamma. So as you guys can see on the option chain, oh, it doesn't have it here, but if you go onto the option chain on any brokerage, you can see the delta, or sorry, the gamma. So gamma is the rate of change, the acceleration of an option contract's delta. So you know how delta is the rate of change of the contract per dollar move. Gamma is the rate of change of the delta based on the single point move. So the example I give here is if an Apple contract has a delta of 50 and the gamma is 0.10, a $0.10 move on Apple will increase the delta to 0.60. So does that make sense? So say Apple is at $100. It's not, but let's just say Apple is at $100 and it goes up to 101. Theoretically, your contract will go up 50 cents per contract, or sorry, per share, so $50 per contract. So once that goes up, your delta will increase to 0.60. So say Apple goes up another dollar from 101 to 102. You will gain $60 on that contract. So that's gamma. That's what gamma is. Now, that's kind of confusing to some people. I tried to explain it as simple as I can. But if you have questions about gamma real quick before I move on, let me know in here. I'll give you guys a couple seconds to chat. It's pretty self-explanatory what gamma is. What's going to confuse you guys is how market makers utilize and hedge their delta and gamma levels. But I'm going to keep it very, very simple for you guys and try to keep it not confusing, because sometimes it even confuses me. But basically all you need to know is that and how they hedge those positions and how you can utilize that in your trading. That's pretty much my main concern here, is how you read it, how you utilize it, and then how you can use 0DT in all expiration gamma exposure levels. I don't really want to confuse you with how dealers use it, but it is kind of important to understand what gamma exposure is. No questions? Or gamma is no questions at all? Dun, dun, dun. So what I say here at the last part here is gamma is like the momentum aspect, and it can create exponential moves. So as you guys can if you guys remember the the GameStop move back in 2021, I believe it was, or 2020, 2021, I think. You can see that there was a huge gamma squeeze and short squeeze on that. You can see the option contracts went absolutely insane, and that's because of the exponential move between gamma and then delta. The gamma kept increasing, and in turn that increased the delta, and that's why it just went absolutely insane, and that's why people made so much money on that squeeze there. Okay, so let's move this. So why am I telling you, wait, did I skip them? Okay, so why am I telling you this about gamma and what that is? So there's two important things to know for multiple reasons. One is to understand the dealer positioning, and two is how option contracts move, and that's kind of what I explained to you just previously, how those option contracts move. So let's talk about dealer positioning a little bit. So in the options market, there are buyers and sellers. You guys know that. So when you buy an option contract, there's dealers selling you that option contract. So let's say you buy a call. Selling a call is a bearish position, and buying a call is a bullish position. But because dealers do not want to have bias in the market, and that's important to note here, I highlighted it, they always want to remain delta neutral. So what market makers do is they profit off the bid-ask spread. They make their money by selling those options. So they don't want to have a bias in the market. They don't want to be bearish or bullish. They just want to make money off selling those options. So what they do is they want to remain delta neutral. So in this case, selling a call contract, they will have to hedge that position. So in our example, if there's a seller, they have to hedge that position, because selling a option contract, selling a call is a bearish position, and then buying a call is a bullish. So in this example, they have to hedge to become neutral, because they're now bearish on selling that call. So a little example that I have here, just to simplify it a little bit more, is you buy an Apple call. So Fitz, you buy an Apple call, for example. So the dealer has to sell you that call. Now dealers have to hedge that by a delta of 50. So say we go back to that example of the Apple contract. So now there's that delta of 50. Now they're bearish 50 delta. Now this is going to be very, very confusing to you guys, but just bear with me, okay? It'll start to make sense a little bit more after I get through these slides. So since they sold you that Apple contract, they are now bearish. Dealers will hedge that bearish position by buying 50 shares to become delta neutral. So what I mean by that is, since they sold you that Apple contract, they are now going to hedge that position by buying shares, which is the bullish. So they sold that bearish position, that call contract, by buying shares of the underlying to remain neutral. So that's the delta. That's how they became delta neutral. Okay. Is the dealer the same thing as a market maker? Yes, it is. Thank you, Fitz. That's a good question. Market makers and dealers are the same thing. Those are the people that move the markets, and that's kind of why that's why I like data analytics so much, because market makers move the market. People on Twitter and retail investors do not move the market. So that's why I like data, because you can't argue it. It's there, and you cannot argue it. That's pretty much it. That's why I like data so much, and why I push it. Okay, so you guys understand this. The dealers, they have to hedge by buying the underlying with delta. I hope that does. If it doesn't, it'll make sense as I move on. Okay. So, but the stock dad, we just talked about gamma. So since they're delta neutral now, but now they have to worry about the gamma, because if the option contract goes up, the gamma will increase as well. So now they have a bias in the market, because that gamma increased their option contract. So now they have a bias. It's going to be slighter. It's going to be a little bit, it's going to be littler than the delta contract that we just talked about. But still it is a bias in the market. So they have to worry about the gamma. So that is why I focus so much on gamma exposure, because that's actually what moves the markets and where the market makers are going to be at, because when they sell you that contract, they're going to immediately hedge that position right away. So it's pretty much already fixed into the rate of that contract. Nowadays, it can be done with like the snap of a finger, right? It's all done on computers, and they hedge that position right away. But since the market moves in certain ways, that is the factor in which gamma comes in, because market makers are in certain places at a certain time, and they can't really hedge that right away because they don't know where the market's going to be going. Does that make sense? So what might happen? What must happen once the gamma exposure level, or once the gamma comes in to a certain area? So dealers must change the underlying shares or hedge that they just bought to be neutral again. So they must be gamma neutral all together, gamma and delta neutral. So it is the opposite if price decreases in this example with calls by selling the underlying. So say a option price goes up. So say, we'll go back to that Apple example. So say someone sells you, or that market maker sells you that Apple contract, and you win. You're the buyer, and Apple goes up. So they have to hedge by selling the underlying, because the gamma keeps increasing, and then the delta keeps increasing in that favor. So they have to keep hedging. Okay, Fitz asked one more question. Would the dealers ever want to not be neutral? No. Maybe in black swan events. I'm not too sure on that question, but that is a very good question, if they would want to be neutral or not. For the most part, 99% of the time, they'll always want to be neutral because they make their money that way. But there could be like black swan events. I'm not going to be getting into that, but for an example, like COVID, they could have been, dealers could have been bearish, and they could have made their money that way. But yeah, for the most part, they're always going to want to be neutral, and that's how they make their money. Okay. So key takeaways for gamma. Oh wait, I didn't go over that. Hold on, that is not the slide for right now. Okay, let me see. I can't even remember what I wrote. Dun 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 dun. I know that's really confusing to you guys, but it's really confusing to me, honestly, too. But you don't really need to understand how dealers and market makers work with the gamma levels. You don't really need to know the nitty-gritty of each of these Greeks to really know how to utilize them. So that's kind of why I'm here. I want to show you how to utilize those levels to your advantage. But I did want to go over that briefly just so you kind of understand what those gamma levels are and how to utilize them. Or sorry, not how to utilize them. I haven't gone over that yet, but kind of just to understand how those dealers work and how they need to be delta neutral and gamma neutral as well. Okay, before I go into the gamma exposure levels and how to utilize them after going over this, but do you guys have any questions before I move on? Now, again, I'm not too seasoned in the nitty-gritty of it. I'm sure you guys can tell I'm not the most professional Greeks teacher, but I do understand it enough to utilize it in my trading. But yeah, if you have any questions about it, let me know before I move on, because now we're going to go over like the live trade and how I utilize these gamma levels. No? I know it's confusing. You guys probably don't have any questions because you're like, what did he just say? Okay, so let's go over these gamma exposure levels right now. Move over here. So today was actually a amazing example of how to utilize these gamma exposure levels. So this is the 0DT gamma exposure level chart that I have here. These are where dealers are going to be supporting moves and also rejecting or supporting certain moves in the stock market. I utilize this tool every single day. I also utilize this one in my weekly levels, and these are very, very powerful. This is the same exact thing as the 0DT one you see here, and they're just different charts. So this is the 0DT levels. You can change it to strike prices if you want. They're just different charts. This one's over time, and then this one's just the bar chart with the levels here for SPY. But if you go over here on this one, this is the same exact thing. This is just all expiration gamma exposure. You can see that there's big levels, positive and negative gamma. You can, and I'll explain what this means in a second, but I'm just showing you guys what the charts look like. But you can see that these big levels are where market makers are most present and where they'll support those moves. And I'll explain what each of these mean in a second. But for the sake of this lesson, I'm going to explain what these bars mean for the 0DTE chart, because this one worked actually freaking amazing today. I missed this move earlier today because I was preparing for this lesson. I was also in a meeting too, so. But what was really cool, maybe I'll do like a live thing. Let me pull up Discord real quick. Discord, and then let me go to my channel. And I can kind of show you what my thought process was during these gamma exposure levels. There, all you guys. Let me see. Okay, here's my Lips Flow channel on High Roller. If you guys aren't in High Roller, I would highly recommend it if this lesson intrigues you at all. So let me move to at the beginning of the day. So I always update these. I'm not updating right now because I'm in this lesson, but I always update what I'm seeing in the market with 0DTE GEX and market net flow. Pretty much whenever I see a big change in either of these data sets, I let you guys know, and it'll make a little bit more sense once I go through this. So today was actually a great example of what we can do, how we can utilize GEX, these gamma exposure levels, and market net flow coinciding together. Okay, so right off the bat at 6:40 a.m., that's when the market opens for me, 6:30 in the morning, Pacific time. So right at the beginning, we can see that we were pinned between these two gamma exposure levels, 438 and 437. So these green bars, remember, once we look at these levels, there's going to be dealers, there's going to be buying and selling pressure, and resistance support between these levels. Green is support and resistance levels. That's where dealers will have to hedge once price gets to those levels by either buying the underlying or selling, depending on where price is. So you can see right at open, this is why I have the chart pulled up here. You can see that we opened around 437.40 on SPY, and we head up to that 438 level. You can see that this is a big rejection zone. Look where we rejected 438, spot on, almost to the penny. That's where the dealers had to sell the underlying to remain neutral on this gamma. And that's why I went over that a little bit earlier about gamma exposure being delta neutral and gamma neutral, because these bars play a huge factor on how price moves, especially the 0DT ones, because those move the quickest and data changes all the time with those. So dealers have to act quick in order to hedge those positions, if that makes sense. So you can see at morning, we said we have a huge resistance at 438, and that was at 1040, or sorry, not 1040, 640 in the morning. So I turned it to the minute chart here. So this is market open. 640 was about right here. Let me plot a line so you guys can see it a little bit better. 640 right there. So that's where I posted this little update. You can see we were pinned between those, and then we head up to that 438 level, and we rejected it almost spot on. And you can see that we head back down to that 437 level, which we bounced off of. Remember, it depends on where price is. So if price is in between these two levels, in this example, we're going to have a lot of whipsaw action until some data moves. So this is the live example that you can see here. We kind of rejected it slightly at open, and then we did eventually hit it, but we rejected it. Okay. So I'm not going to go over market net flow yet because it was bullish in the morning, but I will go over that shortly. I kind of want to just focus on gamma exposure right now. So yeah, oops. You can see that I updated everyone about 30 minutes after the market opened. We hit 438 and then bounced off 437. So remember, this data changes all the time, so you have to be paying attention, especially to the 0DTE gamma exposure levels. So you can see that it's changed a little bit after about 45 minutes into the market. You can see that 438 is still a pretty good resistance level. But you can see that 437, after the bounce on 437, you can see that it went super negative. So what the negative bars mean is dealers have to support the move. If it goes through that level, they have to support that move to the downside. So they have to continue selling those shares depending on where price is. So if price was at above 437, that's why I always say that the big negative gamma exposure levels act as magnets, because dealers have to hedge their position by selling into that depending on where price is. So if there's a negative gamma exposure level at 440, they would be buying into that level. And if there's a negative gamma exposure level to the downside, they'll have to be selling the underlying towards that level to become neutral. Does that make sense before I move on? This is a great example of what happened today. So let me move this back to the 5-minute channel, or 5-minute chart. Makes sense. Aren't green bars just calls? No. So this is gamma. These aren't call buying. This is the gamma exposure levels. This is where dealers are, where they have to be hedging at certain strike prices. So all that plays into part with like the buying and selling of option contracts at certain levels. So say there's a lot of, so in this example, you can see that there was a lot of positive gamma. So they're good in hedging in that part. So they'll act as resistance there, and they just hedge depending on how data moves. Okay. So right here, I use both these. I use the bar chart as well as the line one. The line chart is a little bit better because you can see how these gamma exposure levels move over time. So you can see that the 436 level went positive. So that was going to be a good support level if we move down to that level. And then the 437 level was the one that went negative. Now that changed a little bit before we got into this lesson. You can see that since we hit that 437 level right here on this downward move, we were right here, and we kind of played around it for a little bit, 437, and that went positive. So since it fell below that level, 437 went up. See this? See how this data moves? So since it fell below that level, those dealers were now hedged. So now it's going to act as a resistance level because now they're hedged. So when we broke down below that 437 level, we broke to like 436.50. We came back up and retested it. It got above it slightly, but nonetheless, we had a pretty big rejection zone around that 437 level. And that's what you see here on this data. Now about, let's see, so that was at 8:21 a.m. So about 20 minutes later, this is where I saw it. I got super excited over this one. Now, I wish I would have played puts on this, but you want to pay attention to these big drops on gamma exposure. When you see something like this, where this level, so this is 435, you can see on this little key, you can see that the gamma was super negative. Now, remember what I said earlier, when these gamma exposure levels are negative, dealers have to support that move to wherever it is, up or down. So since in this case at 842, if you guys were in the live stream with me, you know what I'm talking about here, because I got super excited. So at 842, let me go back to the minute chart. 842 was about here. So this is when I noticed this big downturn. So it started at like minus 600, and then it got even bigger to minus 1200. And you really got to pay attention to those big ones. It's huge. So at 844, so a couple minutes after that, so about up here is when that was super negative. So that price was like at 436.70, and the negative gamma exposure level was at 435. And look what happened almost immediately after we saw that big. So dealers had to hedge that position by selling that the underlying and go all the way to 435. These big levels are almost 100% gonna hit, especially the big ones. Over 1,000 is insane. So yeah, we missed that. I missed that short because I was in a meeting and preparing for this, but you can see what happened. So dealers had to push that price from 436.70 or so all the way down to 435. And that's exactly where we hit, 435. It's kind of crazy. It's like a cheat code almost, because you know where dealers are and what they have to do. Now it doesn't work 100% of the time like that all the time, but Today it worked flawlessly. So that's kind of why I pay attention to market netflow as well. And I put into consideration EMAs and all that stuff too. And I can go over my my strategy too. But for the sake of this lesson, it worked amazing. Was in the trade as well. Nice, Medi. Yeah. So if you're in it, congratulations. 8:42 your time is the exact time I bought puts. Yeah, I know a couple of you bought it, was in the live stream with me. It's kind of crazy how that worked out, right? It almost immediately happened. And it went below 435, but still, I mean, it hit that almost perfectly, and that was the pivot point. And now we're heading up currently. So yeah, that's gamma exposure. That's my favorite tool of all time. That and market net flow, my favorite tool. Look at this. You can see call buyers. You can see that we have green convergence and the market's heading up. It's freaking amazing. You can see that 438 is heading down now, so that's kind of like your target. Look at that. It's working flawlessly today. This is live data, by the way. You can see that calls are going up, and then this 438 level is heading negative. So dealers have to force push that market back up. How do you know if you should stay bearish or change to bullish after it hits 435? That's why. So for my strategy, so I guess we can go into my strategy now. I know it's been over an hour of the class, so I appreciate you guys being here. But if you guys want to stay, I can go over a couple questions that you may have before we wrap it up here. But Medi, you do ask a good question. So for my strategy, if I do get into puts, like I should have with Rather Be and a couple of you guys, Rather Be and who else bought puts in here? I know someone mentioned it. Rather Be and Medi. Yeah, both of you guys did. But that's why I take profits on the way down. So I always start trimming around 10 to 20%, and then I just trim on the way down. Now, that 435 level was our target, so I probably would have taken most at that and maybe left a couple runners. In this case, I probably would have gotten stopped out on those runners. But for the most part, I always take profits on the way down. If it goes in my favor, I'm gonna start taking profits regardless of what data is telling me. Because you never really know, right? No one knows where the market's going to be going, but we do have different strategies and different data sets that we can use to kind of persuade us on where we think the market's going to be going. But all in all, we never really know where the market's going to be going, so it's always good to start taking profits along the way and having a strategy set forth once you enter that trade. For me, it's going to be taking profits starting at 10 to 20%. Taking it most there at 20 to 30%. And then I always look for my levels as well, those gamma exposure levels. Sorry, guys, let me take a drink. My goodness, this is the most I've talked in a long time. Okay. Ugh. I hope that answers your question, Medi. Okay, Cheeks asks, if the 435 is still negative, is it now invalidated because the 438 went negative? That's a good question. For me, if it hits that level and it's still negative like it is now, it's not per se invalidated, but that's just the target that it hit, and I wouldn't really be paying attention to it much more. I would be paying attention to something else. So since that 435 level hit and that was negative, and the dealers supported that move down, and we pivoted off that level, yeah, I wouldn't really be paying attention to it anymore, but it could change if it starts going negative again. So say it goes even more negative than it is right now, so it's at minus 1,000, which is still a lot. If it moves back down, we could see another downward move in the market, but it just depends. But since flow is bullish, you can see that calls are being bought up like crazy, and that 438 level is negative. You can see that the market makers are being forced to buy up SPY to hedge their position. It's kind of cool to see in real time, right? It's working flawlessly, of course. Sometimes it doesn't work. It has its ups and downs, guys, like everything. So you just gotta take it as it is. Today has been absolutely phenomenal. So since we have a green flip and 438 went negative, that would have been a great idea to get in call exactly, Cheeks. That's almost exactly my strategy and what I do, implementing gamma exposure as well as market net flow. Let me draw on this here. So you can see a small green flip there, which it would have worked. Oops, my arrows are terrible. But it would have worked there because it caught the momentum move up there, but it slowly turned gray, but then it flipped green again. And you could probably have, that would have been a very, very good entry on calls, because calls were heading up here, as well as, I'm not sure when this turned negative because I've been in this classroom with you guys, but all in all though, the price of SPY is still moving up towards that level, and dealers are being forced to buy up the price of SPY right now. But yeah, I definitely coincide GEX and market net flow convergence with my trading strategy. Good question. You guys have awesome questions. 0DT flow is showing when to buy calls and puts throughout the day. Yeah, so this is another tool. I don't use it that often because it's flawed, but a lot of people like it. But these are the 0DT flow. You can see where puts are being bought and calls are being bought as well. But yeah, I hardly ever use that chart. The change and the strike are also strong for 438. Yeah. So yeah, again, you can see that downward move on this 438 level. So dealers are forced to magnetize towards that level or buy upwards, since that's above us. So you could have caught a nice move. Now, not saying that it's going to hit that level, but I mean, that would be your upside target if you were bullish. So if you were in a position long, you would start to take profits along the way. And that's a good pivot level too, right? That was the high day from today. As you can see, 438. Oh, did I miss your question, Monica? I'm sorry. Hold on. When it comes to sizing, how do you decide between going light or buying a couple contracts? So like a day like today, so this big spike down on gamma exposure level, that gives me a huge confident move to the downside. So you can see that flow was kind of bullish, but there was gray convergence. So gray convergence means that price is going contrary to SPY. Remember what I said? Or sorry, gray convergence, the move is going contrary to flow. So once we saw that huge spike down on that 435 gamma exposure level, that would have made me go maybe a little bit more aggressive in my contracts, just because of how the data was reacting. So I normally always buy 20 contracts no matter what, but that can fluctuate depending on how confident I am in the move. Good question. Number 2, you have one more question. Have you ever full ported that? I've never full ported a play unless it was for like a challenge account. Today would have been, let's just say, I'm not going to say the full port ever. I do not constitute full porting ever, but today, if I were to full port, today would have been a good full port day, just to say the least. Good questions. Never full port, guys, ever. I wouldn't do it. Okay, yeah, if I'm missing questions, just feel free to tag me, guys. I think this question slipped past you as well. Let me see what do. How much time do you have to react when you see one of those big moves on gamma exposure? Minutes, probably. It's usually minutes, especially 0DTE. I'm going to go over the regular gamma exposure level chart too, so you guys understand what I do every single week. But yeah, for in this situation, it was about 3 to 5 minutes you had to react on that, because it was so drastic. But sometimes if they're like slow progressive moves on gamma exposure, you have a little bit of time. But these big ones, you got to react quick. I know a couple of you guys caught it, so congratulations if you guys got that. I watched it go by, of course, while I was in a meeting. Those contracts I was going to get were up like, I don't know, 50% or so. Okay. Do you guys have any more questions before I go on to my weekly levels? I hope that makes sense to you guys. So I'm not too seasoned in how Greeks work and the advanced stuff, and neither should you guys. I don't want you guys to be confused on this. My whole idea is to further your guys' understanding on how to use tools to your benefit in trading. and to be a little bit more profitable and find a edge in the market. That's pretty much all I want to get out of this lesson for you guys. So it's not to confuse you, but I did have to give a little backstory on gamma and delta neutral and how dealers work, so you guys understand how these levels work. But if you guys forget how gamma and delta works, it's not that big of a deal as long as you know how to utilize these charts. Let's see. Free month. Oh, Papa's in here giving away free months, everyone. Hey, everyone, bother Papa for a free month. How about that? Ryan. Okay, no more questions before I move on? You guys are just chatting. This is good. So this is probably going to be an hour and a half. I'll probably end at the top of the hour here. I'm going a little bit over, but I hope you guys don't mind. Monica, I see you typing, so I'll wait to see if you have a question before I move on. Monica and Ryan's typing. I'm going to be going over this next. This is a very, very awesome chart to be looking at too. I look at this every single Sunday to plot my support and resistance levels for the week. I can keep going. Okay, awesome. Okay, so for this, the last part of the lesson here, I'm going to be going over this chart. And for this, I got to pull up my watch list. So I post this in my channel every single, I post this in my channel every single Sunday. You can see the gamma exposure levels I plot here. Now this chart is the all expiration gamma exposure levels. So as you can see here, this is the 0DTE one. This is where the market's going to be moving intraday. And then this one is all expiration. So you can see where market makers are going to be most present and as price moves towards those levels. Okay. So for this example, I'm going to be pulling up my watch list that I did on Sunday. You can see that I have my levels on SPY that I'm looking at to the upside and downside. And then you can see the gamma exposure levels from Sunday. Now these fluctuate every single day after market because there's gamma is calculated by the open interest of each strike price multiplied by the gamma. I'm not going to confuse you guys on that, but that's how it's calculated. So this chart changes every single day. And you can see there's positive gamma and then negative gamma. And remember what I said, these green ones act as support and resistance, and then the red ones act as momentum, and dealers have to be buying or selling, supporting the move through those levels. Okay, so here you can see that I had downside targets and upside targets. So I said above 436, or sorry, below 436, we can see 433, and then 430 and 427. And why I say that is because 436, we were around that level. 436 was a resistance level going into Monday's trading, but you can see that we broke above it slightly yesterday and today. But I said above that certain level and then below, so that's why I have those levels. So you can see I have 433 as the next one. So dealers will have to support that move to the downside towards 433 if it gets below 436. And then if it gets below 433, they'll have to support it towards that big level 430, which is here. And then eventually 427 if it got below. And then to the upside, I had 436 and 438. You can see that 436 was support if we got above it. And it would move since this one's kind of small. These are smaller levels, so you got to take that into consideration. But you can see that that 438 level was a little bit bigger. And you can see why today. So I wrote this on Sunday. You can see that that 438 respected that support green positive gamma exposure level. Now, if we do get above it, we could see 440, which you could see here. And that's pretty much just the rundown of how I calculate my levels based off of gamma exposure. Does that make sense? I hope it does. I'm going to look at it live because it's changed a little bit. So this is today. So this is from yesterday's close. You can see that 434 is a good support level. And then 436 is still that big level to look at. And then we can move through. If we get above 438, we can move through to 441. It looks like 440, 441. We have a little bit of change here. So you can see that. So usually, since these are really big bars, I'd be looking at this and say, okay, we shouldn't get below 435 because dealers are present there. They're going to be buying at that level 434 if we do get to there. But yeah, you can see we had a little bit of a pivot at 435. But that's why I look at 0DT gamma exposure as well. Yeah, does that make sense? Why are those two bars white? Yeah, so that's a good question. That's just where the price is. Where is it? I'll go back here. So these bars are white because that's where price is right now. It hasn't updated because I didn't refresh it. So let me refresh it real quick. And then move down back up here. So you can see, oh, it's moved a little bit. So you can see that price is around 437 and it's in between 436 and 437. That's why they're white. But you can tell that this one's negative and then this one's positive. 437 is negative. So looking at this, we should move towards 437 and then maybe even 438, which you could see on this 0DT gamma exposure level here. It kind of coincides well with the all expiration here. Rather be asked, I know you typically trade SPY, but does the tool work as well on individuals? If so, have you ever watched the intraday tool movements on a meme stock? Just curious. Okay. Rather be, are you talking about like gamma on, say, Tesla? I can show you that. Yeah, it works pretty well on individual tickers. I've found that it works better on SPY because there's just so much movement on SPY, and market makers utilize SPY for hedging a lot. So you can kind of predict a little bit better. But gamma exposure does work on Tesla. They have their individual ones too. So you can see that there's a big positive one at 225. I'm not sure where Tesla is right now. Okay, yeah, so it's at 220 right now. So you can see that if price moves up towards 225, we can see a big rejection. Since that's a big positive Greek exposure level there, gamma exposure. We didn't get to it, it looks like. It looks like we opened up yesterday at 225 around there, and then we head back down. So you can see that it rejected that level yesterday. So just looking at this with Tesla, I don't see, unless we get a strong break in bullish flow with Tesla, I don't see us breaking 225 anytime soon. You can see that the net flow on Tesla is super bearish. Super bearish. Okay? Does that make sense? If you have the green bar support and the red bar magnet right after it, then another green support bar, what is my thinking? I'm trying to grasp what you're asking here, Mehdi. If you have a green bar support and then a red bar magnet right after it, then another green support bar, what are you thinking? Okay, so let me see if I can give you an example of what you're trying to say here. So like this one here, I think was what you're talking about. So this is the all expiration one. So you can see that we have a green one here and a red one here and then a green one here is what you're saying. Before the white candles. Oh, so like this one. Yeah, so my thinking is right now, just looking at this chart, is we probably won't get above 438 because we have a big positive level here. So dealers are going to have to sell into that level unless we get a break of that. So you always got to watch it once we get closer to those levels. So dealers will have to support that move back down if we do get towards that 438 level, and support that move back down to 436 or so. Just given off the gamma exposure we see here. That's why I like looking at 0DT, because that's how it moves intraday a little bit better. This one is more like a long-term level that you're looking at. So if, for example, if price moves down and we do break that 434 support level, which is the biggest support level, we should see another bounce towards 430, 429 or so. Since these are smaller, you always got to be paying attention to the bigger ones. And the same goes for 0DT as well. You can see that this one went super negative, so dealers had to force push the market down towards that level. This was a really, really big one. You can see a little bit better here. See, 438 and 435. Okay, so yeah, that's the lesson, guys. If you have any more questions, feel free to reach out to me either here or on Twitter or Discord. It doesn't really matter to me. But yeah, that was the lesson. I hope you guys learned a lot. And it might have been a little bit confusing, but yeah, that was the market net flow and gamma exposure level lesson. Yeah, no problem, guys. If you have questions, just reach out to me. You can tag me in Discord or whatever. And this recording will go up pretty shortly, I think. Let me see how long this is. Yeah, we were sitting at like about an hour and 30 minutes, so not a bad lesson, guys. Thank you. Hopefully, if you guys like this lesson, give Champ a little bit of a feedback. I'd be glad to come in here and explain a little bit more of different tools or go into depth of market net flow a little bit more, or real life examples and stuff like that. Just tag Champ or whatever. Let Champ know that you guys like this lesson, and I'm sure he'll invite me back at a later date. But for that was a lesson, guys. I'll see you guys in the next one.